Joining us today for his take on the markets, Jovis Vistan of AB Capital Securities. Hi, Jovis. Good morning.
Hi, Mimi.
All right. So before we get to the big story of MSCI rebalancing, I wanted to get your big picture take. Is what we're seeing in the markets now, the sharp enough rally to new two-year highs to be making substantial gains should investors want to take profit off the table? Or would you advise investors to hold longer? Because somehow maybe you're seeing an even bigger climb coming soon. What's the strategy?
I think for now, given that the market, technically speaking, has, as you mentioned, has made a new high, that is a reflection of strong positive psychology and confidence on Philippine shares. I think the main driver right now would be, of course, the earnings reports. Mm-hmm. We're in the midst or the beginning of the earnings reporting season, and I think most analysts will be doing their adjustments, hopefully upward adjustments on earnings for 2022, depending on the results and how strong the fourth quarter was. Mm-hmm. So we have a positive catalyst potentially emerging in the form of earnings revisions for 2022. Also, if you notice that the main concern about COVID is no longer an issue. In fact, if you look at the Philippines actually has been outperforming the other Asian countries in terms of controlling the virus this time.
Jovis, before we get to COVID, let's talk about earnings, which you briefly mentioned. We're in the middle of the earnings season, but it's always backward. We're in 2022, but the earnings we're getting are from fourth quarter and full year 2021. But for this year, looking ahead, which sectors look set to give investors the excess returns? I mean, what's the average you're seeing given your for earnings this year, 2022, and given your expectations for the E part of price to earnings and where PR prices are today, how would you be describing valuations 6 to 12 months forward?
Well, first of all, although most of the earnings reports, of course, are backward looking, as you said, but they are also an indication or a clue of what to look forward to. Example, the Jollibee fourth quarter results have shown that consumer spending, it's a proxy, Mimi, of consumer spending going forward. So for the earnings side, I think if you talk about the sector, it looks like you have to play the inflation hedge. Which sectors would probably protect you from the higher inflation that's projected this year? Obviously, commodity supplies are in shortage right now while demand is picking up. So we think the defensive sectors like energy are the ones that would benefit from this current high inflation scenario that we're looking at. Mm-hmm. And with inflation, of course, interest rates would shoot up. As long as demand comes in and interest rates would go up, banking stocks should be able to benefit from higher net interest margin going forward. So I strongly believe that these are the sectors that would do well.
What about the mining sector? Since we're seeing mining, of course.
The mining sector. But the problem with the mining sector is that there are very few liquid mining stocks. We can only probably speak about Apex Mining, Nickel Asia, and Philex.
Do you have a number that you're looking at, Jovis, an average earnings growth for this year in comparison to last year?
I haven't really checked on that, but I would say double digit easily this year, I could say.
All right. We have this just in, the PSE index opening higher by 0.08%, less than 1/10 of 1%, 75.08. Going back to the earnings, Jovis, I just wanted to share the Bank of America saying that profit forecasts in Asia could slide 17% as the Fed tightens. How do you make sense of that statement? Do you agree?
Well, somehow, Mimi, if you look at the Philippines right now, the fundamentals of the Philippines have relatively been a little better. And take into consideration that there would be a multiplier effect in terms of spending because this year is an election year, wherein money flow would be a lot stronger than usual. So typically, I would say that, for example, I would give you an indicator like inflation. When was the last time that you've seen the Philippines actually have lower inflation than the more developed countries like the US and Europe? So I think relatively speaking, we have stronger fundamentals compared to the other emerging economies. So I think that's a positive. In fact, while everybody else are thinking about higher interest rates with certainty, the BSP is actually still contemplating whether they will raise rates or not. So that's a testament to the strong fundamentals that we have.
All right, Jovis. So let's move from central bank speak to the MSCI rebalancing. Big news this morning. We do know that there are no additions or deletions for Philippines in the MSCI rebalancing, but there are adjustments to weightings, whether up weighting or down weighting. Which companies are seeing those changes, and what's the impact on flows? Because a lot of the institutional and foreign investors look at these MSCI guide as a guide on how much they're going to be putting their money in the Philippines, for example, or in other markets.
Well, the last I checked, there were no major additions, meaning no major deletions. There were some reweighting, but the net effect for the Philippines is a positive flow of around $100 million on my estimate. So the overall impact should be positive. And I guess the deletions are very minimal as compared to the additions in terms, not only in terms of the dollar number, but also in terms of the number of shares.
All right. So we'll take note of that. We have heard that some property names are being adjusted. A port name is being adjusted. We'll try to get the details later on. But first, let's go over, Jovis, some interesting corporate stories. Let's start with Jollibee, and you briefly mentioned this. Let's give them the details now. Jollibee fourth quarter net income up 60%. This is net income attributable to parent. 3.2 billion, revenue up 23%. Full year net income, actually, they reversed losses. It's a profit of 5.9 billion pesos. Another quick comment on this, Jovis. Did you expect this, or is this a positive surprise?
It was expected, but as far as I know, this is above consensus. So it's in a way a positive surprise also. But it's not a surprise in the sense that we really saw the fourth quarter in terms of foot traffic, especially in this area in Metro Manila where I'm based. I'm actually here in the Divisoria Binondo area. The foot traffic here in the fourth quarter was like pre-pandemic at that time.
Wow.
So I think it's a testament, as I said, to it seems like the Philippines right now is slowly going back to normal in terms of our mobility and our consumer behavior. Hopefully, there are some changes in our practices in our purchases, but nonetheless, the purchasing power is coming back. Although the employment data, as you mentioned, was not so good, the average wages are down, but we may have seen the bottom in terms of the worst, in terms of economic numbers.
And let's hope that the January surge from COVID is just a one-time thing, and we go back to the strong showing from December. And Jovis, it's important to note for those who are seeing the numbers from Jollibee, just look at the net income coming from Q4. It was really Q4 that pulled the numbers up. It's more than half their full year net income. So it's a good sign. Hopefully it keeps going that way. Other corporate stories, Price Corporation posting a 12% growth for full year 2021 income to 1.8 billion. That's strong sales of their LPG products. And Tonic, digital bank, gets $131 million in fresh capital for their Philippine expansion. Among those who invested, they're being led by Japanese banking giant Mitsuho Bank. Very quickly, Jovis, the digital banking play, how much premium are investors putting on this? Because we've got some listed companies in this play.
Yes, right now everything is going digital, Mimi. In fact, companies that are into digitalization is getting a premium. Well, those, I wouldn't name the companies, of course, no, but right now that's the way to go. Especially with it's called the new normal right now. People buy and sell products online. So if you don't have a presence, they will be left out.
All right, it's all digital. Going to other interesting stories, Century Pacific from the Shakey's Ventures, the Poe family from the Shakey's Venture, Peri Peri Chicken, of course, Century Tuna. Century Pacific is venturing into mass housing development with their Pacific Home Development. group. They're working on their first project now. It's going to be called Hamana Homes, and it's in Pampanga. Work is underway. Do you think this is a smart move for the Poe family to be venturing into the property sector now, or are they spreading themselves too thin, or what? They don't have the expertise here. What do you think?
Well, they haven't proven themselves in that area, but Mimi, what does it show you? That the Poe family has been very aggressive with the recent acquisitions of the brands like Potato Corner and
Ligo sardines.
So you're taking risks. If I were an investor, I'd be happy to give my money to people or businessmen who take risks. That's how I would look at it. That's the success would be. We have to wait and see if they would be successful in that area, in that field of business.
All right. A few more. The Department of Finance is eyeing credit rating system for LGUs, local government units, who plan to raise green bonds to try to finance their own projects. We also have this from the PSA. Potato output suffers the steepest decline among root crops and vegetables last year. Production was down 9.3% to 103,000 metric tons. Onion is the second biggest loser. Production there is down by 5%. Jovis, we've come to the most exciting part of the conversation. The blind item. Talk to us about the stock that you're monitoring closely. I think you like the stock. Just describe, don't tell us. We're going to leave our viewers to guess what this is. So what do you have for us this morning?
Okay, my first clue would be that this is in a sector that should best benefit from the reopening theme.
Okay.
Well, in terms of improvement in foot traffic, and also, if you look at the downside risk, I would say it's minimized by the recent announcement of the firm that they're doing a 3 billion share buyback. And I'm trying to minimize the number of clues, so not to give it up. Okay, I'll just give you, in terms of the target price, it has an upside of around 29% from our target price, a 12-month target. It's currently year-to-date still negative. As the market makes new highs, this stock hasn't really made a move. So you have minimal downside risk because of the share buyback, potentially a beneficiary of the improved mobility and reopening play.
All right, we're just going to have to guess which stock this is for those who want to take advantage of the 29% upside for the next 12 months. Jovis, always happy to speak with you. We're looking forward to our next conversation. Do keep safe.
See you, Mimi.
See you soon.
Thank you.